What's up, everyone? I'm William, and today we're going to be talking about insurance, or the lack of it, because it seems like insurance is about to go skyward in prices. And that's what we're covering today on the Finance Edition. And it's time to read the news. And first, we have 3 companies dropping more than 50,000 Florida home insurance customers. And as it says in the subtitle, not all of those customers are aware they're about to go into hurricane season without coverage. So let's get into it. More than 50,000 Floridians are about to lose their home insurance, and many of those people have not been told yet. First off, oh my goodness, could you imagine? Like, as it says here, this comes at the start of hurricane season in less than 2 weeks. Like, oh my gosh. So you're in Florida, right? You expect the hurricane season, and you know that you pay for your home insurance. You pay for home insurance that should protect you and that you expect that you may every once in a while have to pay the deductible, and then you would get your house repaired or replaced according to the actual terms of what's in your home insurance policy. And here they are saying, hey, hurricane season is coming, and some people, 50,000 of them, might not yet know. And it says here, 3 insurance companies are Universal Insurance of North America, Gulfstream Property and Casualty, and Southern Fidelity. So if you are a part of any of those 3, heck, if you live in Florida at all, you should be figuring out what your options are. Like just reading this right now, like you have a lot of concern coming your way because you might get a letter saying, hey, you don't have insurance. And it just gets worse. While some insurance agents are reaching out directly to their customers to let them know they're getting dropped, it's on the state to send out the notification. Oh my gosh. Could you imagine? It's like, wait a minute. You get dropped and your agent's just like, maybe I don't want to give out bad news. I'm going to just like wait or not do anything, and we'll just let the state send out that notification. Oh, that's so sad. And with those letters going out last week, there's a good chance not everyone is aware they're about to go into hurricane season without coverage. Wow, what a nightmare. So you're at home, you get this letter, and now you need to go shopping for insurance, and you're no longer covered. That would just be so bad. And you see here, they give the reason. It's mostly being driven by roof fraud. Insurance companies at the end of the day, because they have been losing so much money, they decided, look, we're going to raise our rates to the point of where we're going to collect the cost of a new roof from your premiums in about 3 years. Oh, wow. So they're going to try to jack up their rates just to make that money back. Goodness gracious. And as it says here, in addition to raising rates, they said those companies decide not to renew some customers and only accept customers with newer homes and roofs. So here's the thing. I recently just got new home insurance myself, and it was quite the process. So what happened was my premiums were about to go from $1,400 to $1,600. I know it's an increase of $2, but it's going to be hard to take $1 from me. So when I saw that my premiums were going up $200, I took action, and I ended up getting a price that went from $1,600 to $800. Now you have to shop around, and if your goal is to get the lowest premium like it was for me, and I tend to not need to use my home insurance anyway, then shop around and you could get a better deal. But if you're in Florida right now, that's probably not what you're thinking. You're kind of just hoping that you can get coverage. So going through this, regardless of who you call, have patience because there are tens of thousands of people in the same boat. Like, oh my goodness. So that means that you are trying to get insurance with 50,000 other people, and they're busy handling the calls of everybody else as well. He said, as you find you've been dropped, they said, I would really strongly advise against making the premium the number one thing that you look at. Even if you get a low premium, it will go up. So that probably needs to be toward the bottom of the list of what you're looking at. You want to look at the quality of the carrier. My goodness. So I feel like that's incredibly difficult. Because if you're going to try to go find the quality of the carrier, that kind of just means you're going to go and look on online reviews and try to be like, well, are they good? Will they pay out their claims? How much are they going to increase my premium at some point? And let's face it, if the premiums are going up to the point where they're going to try to recoup the cost of a roof, a brand new roof in 3 years, I think premium is going to become a major factor because at a certain point, it's just expensive. Florida Insurance Commissioner said that they made the decision to approve the cancellations and non-renewals as an extraordinary remedy to address insurers who would otherwise be in hazardous financial condition, and ultimately the companies can no longer pay up. So in other words, they were screwed and they said, we'd rather just reduce the risk because we have to. My goodness, that is a disaster. So to our second article, we have from Axios, Uninsurable America, Climate Change Hits the Insurance Industry. And I love Axios because they just have a lot of single dots that makes it super easy to read and get the information quickly. So it hits up another state. Decisions by 2 major insurers to stop offering new homeowners policies in California highlight the growing portion of America that's becoming close to uninsurable. They say close to because they don't want to say it's totally uninsurable because then you'd probably just move out of California, like now. Why it matters. The threat of climate change related disasters is a large factor driving up consumer costs and putting insurers out of business in parts of California, Florida, Louisiana, and elsewhere. So my thought here would be that if you live in California, Florida, and Louisiana, even if you think that your insurance is set up here, like you're gonna be concerned, and you should be. Because, as you see here, there is a lot of people being dropped. The recent moves by State Farm and Allstate to stop offering new homeowners insurance policies in California have kicked off a national conversation on insuring risk in an increasingly perilous climate. State Farm said in late May it was done accepting new applications for California property insurance, including homes and commercial property, due to the historic increases in construction costs outpacing inflation, rapidly growing catastrophe exposure, and a challenging reinsurance market. Okay, reinsurance is incredibly interesting, to me. I know I'm not most people, but hey, it's very interesting. So the point of reinsurance is to recognize that home insurance companies don't just pass out insurance, but they are also insured themselves, which is kind of mind-boggling that home insurance has to have insurance to also cover them, but that's kind of beside the point. What that means is they have to also be able to cover the cost of insurance to cover themselves in this case. And so because they have had to pay out a lot, that means that their people who are paying reinsurance on them have to then increase their premiums as well. So oftentimes we're like, wait a minute, like home insurance must be the people who are deciding to take in all the money, and they're going to be taking in all these massive amounts of premiums, and it goes right into their back pocket, right? Not quite. They are in part just shifting that money right to their reinsurance premiums because they also have to pay someone insurance. Crazy premiums come for everyone, apparently. An Allstate spokesperson confirmed to Axios that it quietly did the same thing in California in 2022 for the same reasons. So let's take it from this point. Allstate says nothing. They just do it in 2022 and it comes out in 2023. And State Farm says, look, we're doing it now, sorry. What's really interesting is that means that this could keep going until more and more of the insurance carriers just stop supporting some of these states. And I've been hearing that in Florida, there's still 140 insurance carriers that will do business in Florida. But it's probably just really expensive, which means it's not exactly affordable and you're going to be spending lots of money. Like I said, I was about to spend $1,600 in premium, and obviously that's low, and it's because I'm in a middle state. And as it says here, the big picture, disastrous wildfires have plagued California in recent years, while multiple hurricanes have hit Florida and Louisiana, racking up losses for insurers at the same time that home replacement costs have skyrocketed. And they're totally right. The cost of homes has completely gone up, so they are doing huge payouts to cover this. Studies show that climate change is leading to larger and more frequent wildfires in much of the West. Now, I know that this is an interesting point. I've been hearing that even though we have lots of situations where it's expensive to do the repairs, apparently we also keep building bigger and bigger, more and more expensive homes in these areas where these fires occur. And so when we do the math according to the number of dollars of which these disasters occur, the number of dollars always goes up, not just because of inflation, but because we just keep building more and more in expensive and lavish locations in those areas because they're gorgeous. Let's face it, California is pretty. The California regulators have blocked insurers from raising rates above a certain threshold, which insurers say has prevented them from covering the costs of their policies. Oh my gosh. So it's really interesting because if you look at this, it means that their answer is, hey, if we can't do business in your state the way we want to do business in your state, we're out. And it's fascinating because if you look at rents, California is a place where they were put a cap on rents and rent increases, which means that they have to just accept. A renter has to know that they're going to be increased so much, which is good for the renter, but for the person who's the homeowner, they don't really have an option. They just have to stick with it and then raise their rents the maximum they can every single year, because the cost of doing business in that state is much higher than the actual amount that they can raise those rates that they have their tenants pay. And the same thing is now happening with insurance, where insurance is rising hugely in California, but their answer is a little different. Californians don't have to be insured by an insurance carrier, because that insurance carrier can just stop doing business in California. So if you think about it, what's probably coming is that California is going to have to offer a state option for home insurance, and it's probably just going to cost a lot and then just be taxed. And meaning they're going to be paying taxes into it to float these massive expenses, and everyone will have to pay for it. That is entirely something that could happen in the future. And here is the big one. The hardest states to insure homes in order are California, Florida, Texas, Colorado, Louisiana, and New York. And then they go on to say it's a 50 states problem. But the big issue here is if you live in California, Florida, Texas, Colorado, Louisiana, and New York, you should be concerned. The number one takeaway that I would want you to have from this video is, if you live in one of these states, then you should consider calling up different insurance or going online and looking at different homeowners insurance and plugging in your address and seeing what they can offer you. Even if you are insured right now, that doesn't mean that won't change, and it would be good for you to know how much it's going to cost. Because if your price is going to go up, if you have an annual, then you're going to have that price change at the end of that year, and you need to know that you have options, especially if you're going to be receiving a cancellation. Florida, if you live in Florida, you could be receiving a cancellation. If you get that cancellation, you'd be been better off knowing what your options are as soon as possible, so that you can consider what your options are if you receive a cancellation notice. So definitely consider, if you are one of these states, you might get dropped, or your expenses might triple for home insurance. And if your home insurance triples, you need to make sure there's room in your budget to stay in that house and to stay in that state. So here's the big number they had from Florida. In Florida, average annual rates are expected to rise about 43%. Oh, gross. To nearly $6,000 in 2023, according to the Institute. So this would be almost triple what I was about to pay. This is more than triple what I was about to pay. And I mean, I don't live in Florida, but goodness gracious, if you live in Florida and you are going to end up paying somewhere around $6,000 in 2023, if you're on a mortgage, that's super duper expensive. So you should find out how much you're paying now in insurance and recognize if your monthly price went up because it gets absorbed by our mortgage price, like what you pay per month to your mortgage, can you afford it? Super duper important to find out if you can afford paying $6,000, which is roughly $500 a month in additional, well, I don't know how much you're paying for insurance now, but if it turns out that you had to pay $6,000, could you afford $500 in insurance? Now, something that's really important, and they get into it right down here at the bottom. I'm gonna skip some of this. What it says here is that it's worth noting when homes become uninsurable, it makes it difficult to get a mortgage on the property. They say the important stuff near the bottom so that you won't like freak out, right? Well, here's the problem. I'm not even gonna bother saying it's not every mortgage. It's probably every single mortgage company that exists. They wanna know that their investment into you paying into that house means that if you stopped paying, they get a house. So for instance, you cannot burn your house to the ground or the mortgage company will be very angry with you. Let's put it that way. And so from that standpoint, you have to keep your mortgage running or you have to pay up on the full mortgage. You will hit this if you manage to be one of those people where, it'd be terrible. But if you are one of those people that gets the notification that you're being dropped by your home insurance, you have to get insured ASAP. And if you don't, then what's gonna happen is you're gonna get one of these handy dandy letters from your mortgage company saying, hey, we've been told that you don't have home insurance anymore. And if you don't sign up for home insurance, we will insure you at a prohibitively high cost. And it's because they will get you what's called hazard home insurance. I don't know exactly why they call it hazard home insurance. I think it's because it's such a hazard to your pocketbook. It's going to be an extremely high price tag for you to pay. So that's a big deal. And you don't want to pay whatever prices those are going to be because who knows what it's probably another 30%. It could be another 10%. I don't really know. It's obviously very dependent on what type of a deal your mortgage company gets, but they don't go out of their way to get you a favorable deal, which is why they recommend you go and get your own insurance, and then you send them a copy of it. So that's what would happen for you. If you lose your home insurance, you need to go find insurance and then send a copy of the finished form that you've paid for to your mortgage so that you can continue to live there with the backing of a mortgage. So that is the big deal here, is you are going to be in a place where you might lose your insurance. So all that to say, looking at the news, it's pretty dismal because those states are having a lot of people there who are going to be highly impacted by this. So I highly recommend, if you are one of the people who live there, go out of your way, find out if you can get a better option, or at least make sure you know what the prices will be if you were to be insured now, rather than waiting to the end of your year term to find out that your prices are going to jack up. Because the number one thing that you need to be prepared to do is be able to afford your increased amount of home insurance if you live in one of those states. Because if it gets jacked up and you can't afford it, you're gonna have to do one of two things: increase your revenue or decrease your spending. If you can do one of those two things, then you can manage if your mortgage ends up going up because your insurance goes up. But if you don't have wiggle room in your budget, then this could squeeze you pretty hard. So I highly recommend you think about that. Oh, and student debt. That's gonna start up again too. So there are plenty of ways that your budget needs to be nice and trim and proper, just in case you get slammed from incoming student loan or incoming mortgage for home insurance when the home insurance carrier who decides to either drop you or up their rates by 43%.